Hey everyone, welcome back to the channel. Today, we're diving into the latest hype around Meta's layoffs, and why this might be a pivotal moment for the company in such a challenging business environment. Is this a sign of trouble, or is it just part of a larger strategy? In this video, we're breaking it all down, giving you insights into analyst expectations, and my personal take on the volatility of Meta's stock. Stick around because I'll also be revealing Meta's intrinsic value using a DCF calculation, and you might be surprised at what we find. Let's get into it. So, by now you've probably seen the headlines. Meta, formerly known as Facebook, has announced yet another round of layoffs. This follows a pattern we're seeing with other tech giants who are adapting to the post-pandemic economic environment. But what's really behind this move? And is there something Meta is preparing for? First off, Meta is dealing with some tough headwinds. Increased competition in the social media space, rising regulatory pressures, and their massive investment into the metaverse have put a strain on the business. On top of that, they are facing stiff competition from emerging AI players like DeepSeek, who are rapidly gaining attention in the AI space. So, are these layoffs a sign of trouble or part of Meta's strategic pivot? How does this impact Meta's core business? While layoffs can seem like a sign of weakness, they may actually be a way for Meta to focus its resources on its biggest revenue drivers, digital advertising and their long-term bet on the metaverse. Mark Zuckerberg is essentially trying to keep Meta lean and competitive, but we can't ignore the fact that Meta is in a volatile position. With competition from AI companies like DeepSeek growing, and pressure to show a return on the metaverse investment, the path ahead for Meta is not without risk. Investors and analysts are split. Some see Meta's billions of active users as a reason to stay optimistic, while others are more cautious about the short-term turbulence. So, what are analysts saying? Some are bullish on Meta's long-term potential, pointing to their dominance in digital advertising and social media. But others are more skeptical, especially in light of increased competition from the likes of DeepSeek in the AI space, and the big question mark over the metaverse. Let's talk about stock volatility. Meta's stock has been on a roller coaster for the past year. Investors are reacting to news about layoffs, metaverse spending, and increased competition. As the famous quote by Benjamin Graham goes, "In the short term, the stock market is a voting machine, but in the long term, it's a weighing machine." Right now, we're in the voting phase, where hype and news headlines are driving prices. Before we dive deeper, make sure to hit that like button and subscribe if you haven't already. It helps the channel grow and bring you more in-depth analysis like this. And, if you're following developments in the AI space, you'll definitely want to check out my recent video on DeepSeek, an AI company that's rapidly gaining traction and creating waves that could disrupt big tech players like Meta. The link is in the description below. My personal take on the layoffs? I see them as part of Meta's broader strategy to stay focused on what matters most. Yes, there's a lot of volatility right now, but I believe Meta is repositioning itself to stay competitive in the long term. In the short term, I expect the stock to continue being volatile, especially as Meta tries to balance its investments in the metaverse, its core advertising business, and the growing threat from companies like DeepSeek. But if you're thinking long-term, Meta's core strengths in advertising and its vision for the future could be reasons to stay optimistic. Now, let's get to the moment you've been waiting for, the intrinsic value of Meta's stock. I ran a discounted cash flow analysis to estimate what Meta is really worth today. Based on the analysis, using reasonable growth rate projections, Meta's intrinsic value comes out to $554.70, which is lower than its current stock price of $717. This suggests that, even after the recent layoffs, Meta might be overvalued right now, especially with all this uncertainty. Check out the link to previous video on details to run a DCF in description below, or simply comment "awesome" and I will send you the free DCF tool. But before we jump to conclusions, let's remember that Meta still has a lot of potential upside. With billions of active users, dominance in digital advertising and strong ambitions in the metaverse and AI, Meta's long-term growth prospects remain significant. Many investors are willing to pay a premium for Meta because of its market dominance and its ability to innovate. So while we need to be cautious, there's also a bullish case to be made for holding Meta for the long term. So what do you think? Is Meta overvalued, or is it a solid long-term play? Let me know in the comments below. And remember, always do your own research before making any investment decisions. You can use my free DCF Google Sheet to calculate the intrinsic value of any stock. Just follow the link in the description. Don't forget to like this video if you found it helpful, and subscribe to the channel for more in-depth stock analysis. I'll see you in the next one.